So one thing is with most Fortune 500 companies today, they see how important blockchain is. They maybe see the potential, but IBM is kind of an exception there where you've jumped on this probably for several years now. When did this first get on the radar at IBM that you decided as a company that you were going to start investing in this heavily?
Yeah, so it's an interesting story because we used to run, I used to run mobile payments for us in terms of figuring out what it means to handle, the whole journey from, and we are still in that phase, going from the normal traditional payment rails to simplifying it, and economic inclusion agenda of many countries is going after mobile payments. And in that journey, in early 2012, me and my team, we met pretty much 65 plus different payment processors in the world. And in that conversation, blockchain began to surface up in many of those. And so some of us went back and said, okay, we need to figure this out because, it's Bitcoin. And we many of us were just curious, but we knew what Bitcoin was. Mm-hmm. So we went and researched the hell out of this. We spoke to IBM Research. We had an early project of Bluecoin inside of IBM. This is early on. No one really knows about it, but we did have that project. But it's one thing to have a technical project. It's another to make it commercial. Mm-hmm. You need business case, you need investment, you need some of these things. And I think late 2013, when some of our senior client executive began to ask us about our point of view, is when we got into it. And then we announced to the world mm-hmm. that we are, going full steam with it. And something else you should know is that the reason why we got into it, because it's not just panacea, right? It's not just cool tech that we have to do it. If you look at IBM's business, we have been in transaction systems since the inception of transaction systems. This goes back to our very old business of mainframe, DB2, all the database technologies, all the CICS and based technologies. So if blockchain were to be the next generation transaction system, which is what it is destined to be, then we are as much disrupted as the financial institutions that we talk about being disrupted, and many other industries. So I think it's an important step, an important investment in my opinion. That so that's when we announced to the world, and we haven't looked back. I think it's been a phenomenal growth for us as well.
So the most recent development that I saw was the World Wire service, but I'm sure there are other things. But can you talk about that a little bit in the relation to Stellar and how that works?
Yeah, so a few things on this, right? One is there are what we've been to talk about in the industry is protocols, right? Which means that at this point in time, there are many companies working on different technology platforms, different protocols. There's layer 1, layer 2 for optimization, layer 3 for interoperability between protocols, similar to what we have seen early days with internet. I mean, you had basic link layer protocols, and then we have IP, which was abstracted, and then you have application level protocol, which made internet to what it is today, right? We are in the similar level of infancy. And so from our perspective, some execs thought that we should not put all eggs in one basket, which, as you know, we were heavily invested in, and one of the founding members of Linux Foundation, which is an open source community driven projects for Hyperledger. And so few execs embarked on this payment network, which was based on Stellar. So Stellar is the underlying technology. What's important is not the rails, which is the network behind the scenes, but what's important is what we're trying to achieve with World Wire. Mm-hmm. And the ability for us to be able to fence off, provide a more regulated way to transact, be able to introduce newer business model by introduction of what we call stablecoin, which is one way to digitize fiat in the regulated way, I think opens up a lot of horizons and a lot of business models, which is not only interesting, but at the same time solve some real challenges around speed of movement of money, as well as liquidity challenges that many of the financial services and non-banking financial services, are experiencing. So to me, that is something that's more important. Otherwise, there are many networks in the world who are aiming to solve the issue of faster movement of money, right? Mm-hmm. In my opinion, World Wire is aiming to address some of the, barring the regulatory approval, of course, is aiming to solve some of the foundational issue of payment or movement of money, not just domestically, but also cross-border. So I think that's an important distinction that I'd like to draw.
Mm-hmm. And so that was another thing I was going to ask you about stability. And you mentioned the stable coin, the Stronghold USD, which is IBM's stable coin. Is that how you mitigate?
It's not IBM's. It's not IBM's stable coin. Stable coin is, so there's an element you have to understand. The stable coin, just like Tether and just like the other recent one, just Gemini and USDC, which is by Circle, they all have to be backed by collateral, which is fiat, US dollar based fiat. Stronghold is a startup. And because we are a network, we are inviting various entities to issue stablecoin on our network. The stablecoin on its own doesn't do anything until you have a network for it to operate on, right? So Stronghold is one of those entities that basically is one of the participants on the network, which is issuing stablecoin. Of course, we aspire to get banks, various MTOs, non-bank financial institutions, and also accept other stable coins that happen to be running on other networks. But the notion of stable coin is that, it's a digital or digitized version of the fiat that's kept in a bank. It's collateralized, which means that you and me can be rest assured that the token that me and you are exchanging is backed by the guarantees of the currency of the country. And that way, I think, the stablecoin is meant to do that. So it's collateralized, it's backed by collateral, and it's a tokenized form of fiat, which allows me to move money and address the notion of issuance, redemption, and acceptance in the network because it's fiat.
And is that how you would mitigate against volatility that you see all over the place in crypto markets?
Correct. And one way to, for example, and that's a good point you bring up, because in many cases, the genesis of stablecoin, right, which we talk about as a digital asset that's collateralized by a stable asset, which is USD or euros or one of the basket currencies, issued, collateralized, and guaranteed by a regulated financial institution for the purposes of transactional processing and settlement on the blockchain network. That's how we sort of define it, right? And so from that perspective, most transactions, whether you buy or you sell, you transact any of the financial instruments, at the end of the day, you're settling that with movement of money. So there's a duality for transaction, whether you're buying a car or a house, you eventually have to settle that with some form of payment of money. With the volatility of crypto, for obvious reasons that we see, there's a need for the regulated entities to be able to still exploit blockchain and take advantage of some of these concepts that are trying to solve the issue of time and trust. And stablecoin makes that an entry point there in that realm to say we can still do things that are regulated, blessed by the regulators, and is the right way to do it, except that we are only applying technology in a meaningful way to, again, address the issue of time and trust and remove the intermediaries and the cost that's associated with it, and yet be able to conduct business in a digital fashion. That's the end goal of what we're trying to achieve with this, if that makes sense.
Yeah, no, that makes perfect sense, because that was my other question, is how do you convince these other companies, these other Fortune 500 companies, IBM's clients, to deal with blockchain when you just look at Bitcoin today had a more than 10% drop in value. And so if you're transferring money all over the world, how can you guarantee that even in the fraction of a second, you're going to get what you put into it on the other end?
Yeah, and the thing is, like, if you look at, and that's a valid point you bring up, because if you look at, there's FX risk between, when you exchange foreign exchange, the amount you hold on to it, and if the value of that foreign exchange goes down, that's an FX risk. There's a regulatory risk. There's a market risk, depending on, geopolitical issues that govern the valuation, the perceived valuation of those currencies. Because at the end of the day, any currency is a belief system, right? We are valuing a currency based on not just the sum total of the economic activity. At the same time, there's a trust element to it. Regardless of how much gold the country may have, the political climate has an impact on its valuation of its currency, right? So from that point of view, I think that what stablecoin does, and that's why the definition is important, because you can't really have stablecoin backed by any fiat, because the currency that's backing up should also be stable, otherwise not stablecoin. So example that we give is Zimbabwe is a perfect example that, with their hyperinflation that went through and the changes in their notes, now they're on the bond notes, which is pegged to a US dollar. It's hard to collateralize the stable coin with unstable currency. And that's why I think the definition of having a basket currency makes sense, because in many cases, these basket currencies are stable currencies around the globe, namely US dollar, euro, GBP, and yen, as the four dominant sort of stable currencies. So, I just want to be discerning between the fact that it's not just pegging to any fiat, it's using these currencies, and they have advantages that, most countries, the people like to use the word exotic currencies. I like to use the word non-basket currencies. This is the countries like India and Nigeria, where if you want to exchange between these two countries, you still have to go through US dollar or euro as a step-through currency, because there's no real fungibility between Indian rupees and Nigerian naira, for example. And so, using the stable coin as an intermediate liquidity measure solves a lot of those issues that I'm suddenly now pegging, movement of just for settlement purposes, and still providing a step-through currency that's needed in the system. I think that's one of the issues that cost a lot of money to the intermediaries, as well as the entities that are managing it, the network. Does that make sense?
Yeah, no, totally. That's why I wanted to get more in depth on that. So how does IBM view Bitcoin? I mean, do you do any development in that? Is that just kind of like the tech part of cryptocurrency, and you don't get into that as much because it's not as useful for what you're doing?
So it's interesting, because anybody who's involved in blockchain, you cannot and you should not ignore the foundation of blockchain, which is Bitcoin. Mm-hmm. That's the origin. That's the genesis. So many of us are enormously interested, and we all, the technical community is enamored with a lot of technical coolness that is at the table. But we also know that, all the tech that's gone into blockchain is not new. The databases, the encryption, the cryptography, the linkages, the hash algorithms, they aren't exactly new technologies, but putting it all together to create this mechanism to enhance trust and be able to induce a trust mechanism that creates a trustless system is very attractive. And then from there, you morph a model of permission versus permissionless distinction that we make in the industry. So technologically, we are very interested, but I think we work with a lot of regulated entities. We ourselves are regulated. So in many cases, just working with Bitcoin and all out of technical curiosity for business application becomes a challenge for the same reason that the Bitcoin community prides itself of the strength of anonymity and trustless nature of it. And it becomes hard to implement KYC, AML type elements. And there are regulations there for good reasons to prevent not just nefarious activities, but also control, ill use of funds that can be travel across the globe. So from that perspective, I think it becomes difficult. So from business application perspective, we applying the technology to reinvent and redesign business flows and create new ecosystems. But from IBM's perspective, we're not doing, we're not involved directly with using Bitcoins as a meaningful application in the regulated business world, if that makes sense.
Yeah, absolutely. I just wanted to ask about that because that's the elephant in the room. Like you said, that's the genesis. And when you look it up, you don't see much with IBM and blockchain and Bitcoin. It's always kind of these other things. And like you talk about the regulation, that makes total sense. Another thing is, so you're in banking and like finance, but what other industries are you into, or do you see in the next 5 years or so where IBM is going to make inroads?
So we are not just in banking and finance. I'd like to clarify that piece because the industries that at least me and my team has worked on for ages has been diverse. So financial services itself has 6 pillars that we classify, namely insurance, capital market infrastructures, payments, retail banking, corporate banking, wholesale banking. So even banking is not as simple as just calling it financial services. But in addition to financial services, we have looked into supply chain, and supply chain has logistics, trade finance. We looked into healthcare. We're looking into government. We looked into, for example, healthcare from a pharmaceutical perspective versus healthcare as a EMR, EHR, which is the electronic health record industry. So I think because we're IBM and because we have been a de facto technology provider to many of the industries, the expectation from these industries and our clients has been the fact that as a technology leader, you are supposed to provide a point of view and perspective. And so ranging from ad fraud, which is media entertainment, to telecommunication, to healthcare, to government, to financial services, me and my team globally have explored every possible imaginable use case that you could think of. Mm-hmm. In terms of coming up with a point of view and perspective, say, where can we apply this meaningfully? And of course, like any new tech, there's a lot of hype, and it's up to us to cut through the hype and provide the technical acumen and the design work to say, for these use cases, it makes sense to apply the tech. And so, heads down, 4.5 years, a collection of us and industry experts at IBM have been focused on their silos to define, delineate, and discern between the meaningful use cases for every industry.
So that goes along with another question I had, which is, like, if you look at blockchain, it's kind of like a giant database almost, and how do you differentiate something like a SQL database, when you're dealing with another client? Like, how do you differentiate a use case where you say blockchain is the appropriate technology to use for something?
Yeah, so, it's a good question. I've written extensively about this. We published a book that talks about this in detail. Database is a technology, and blockchain also has a database. Blockchain is a database. Blockchain is a computer. Like, if you look at Ethereum, they will tell you it's a massive giant computer that amalgamates the world compute capacity to be able to give you that singularity of compute power that distributed or decentralized computing does for you. You have to read us two things, right? One is there's data and there's digital assets. So we formed foundational tenets, things like trade, trust, ownership, transactionality is some of the tenets that you need to have, which means if you're solving a data problem, then we have enough mature technology around, whether it's centralized or distributed or NoSQL or SQL database. You have plethora of those technologies that have solved, and they all have the strengths and they all are fit for purpose. But in many cases, if you're dealing with multi-party scenarios, that there's a need for time and trust. So there are two constructs that we solve: is time and trust. But if there's a need for multiple parties to transact and ensure that there's a trust enabled between those three parties, and there's a digital asset in the system, I think that's when blockchain surfaces to, or rather blockchain emerges to surface as a viable, economical, and a meaningful solution. If you're solving database problem using blockchain, you can, and there are many POCs that have just done that. But you're not exploring the full promise of blockchain, which is going towards a model that creates a trusted network of multiple parties and gives birth to new business models that simply don't exist today. The ability for me to splice up an asset into smaller pieces and distribute them, I just can't do that today. And blockchain gives you that vehicle to do it. So when you compare them, remember this: there has to be the foundational tenets, trade, trust, ownership. There has to be a notion of digital asset. There has to be multiple parties that leads to the need for trust in the network. And when some of these tenets are becoming a solution design sort of imperatives, then suddenly now I think, to me, blockchain begins to make sense. Otherwise, we're solving database problems.
Right. Yeah, and that makes sense. Another thing is, so IBM is heavily into AI, artificial intelligence. We all remember Watson on Jeopardy, and you see the commercials about all the things they're doing there. Does AI tie into blockchain in any way? Is there anything that you're doing in relation to them?
Oh, it does. It does. So there are a few things, right? And that's a brilliant question. Because to me, what's interesting is convergence, not just for AI, with IoT as well. So imagine shipping, like we are trying to create a digital network, right? So there are a lot of fungible tokens, which is the Bitcoin, Ethereum, that you can exchange things of a value. But there are also things like non-fungible tokens, your identity, your healthcare, which makes more meaning to you and only to you. And you can rent them for benefits. You can give your healthcare records to clinical trials, or you can give your healthcare records to insurance company to give you a discount and do a study. But at the end of the day, it's your asset. As opposed to Bitcoin, Ethereum, and many crypto assets that you can exchange for anything else of value. So IoT and blockchain has value because suddenly now I can create a digital twin. And so as the real assets, your car, your homes, your containers and supply chain, your shipping boxes, as you tokenize them, they become and you create a digital twin. IoT and blockchain makes perfect sense as an amalgamated tech. Same thing with AI. AI is all about data. It's all about artificial intelligence. Our intelligence comes from data, comes from experiential nodes, comes from inferences, comes from analysis. And collectively, we use the word AI, but AI requires a lot of learning for you to get intelligent. Like the day you were born, you weren't intelligent. It took you time and took data points for you to get to that point. I think there are two different maturity curves. Blockchain is at a fairly nascent maturity curve, whereas AI is at a much more mature level. Also, blockchain is about transactions and data, which means that blockchain has to mature to a point where you have a meaningful networks with X amount of blocks that has processed transactions that contain data for you to apply AI models to make sense of these blockchain transactions that have been occurring. So it's a matter of time and maturity curve, but there is an intersection with blockchain and AIoT, blockchain and AI, blockchain data sciences, to be able to give you a more intelligent digital transaction network. Again, creating business models that don't exist today. That's the next generation of Amazon's, the next generation of Google's of the world, I think.
Right, yeah. So I know you said earlier that not to talk about the rails of like the World Wire system, but I'm going to ask, so even working with Stellar, but are there qualifications that you look at if you were evaluating other chains? For example, do you look at proof of stake chains versus a proof of work chain for something you would consider for a project? Are there, what kind of guidelines do you look at?
Yeah, that's a loaded question, man. I'll tell you this, that proof of work, proof of stake, and I've done extensive research in this area where these are trust systems. So again, remember, blockchain solved the issue of time and trust. Time because you have this notion of synchronous data dissemination. So as opposed to business process going through in sequence, suddenly now blockchain has the ability to disseminate the data based on a business process. Trust is foundation. And these consensus mechanisms do exactly that. They provide network-specific trust models. So proof of work, proof of stake, delegated proof of stake, Byzantine fault tolerance, and each of these that I've described have their own sort of variation where people have said, look, this is not efficient. Let me alter this piece, or let me create a better model to make this more efficient because there's a throughput issue in terms of transactions, and yada, 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 right? There's a whole series of things that are happening in that space. So these are trust systems. These are sort of layer one. This is the most foundation of any blockchain network. And each of the use cases will define their own consensus mechanism. They'll define their own trust mechanisms that go with it. So from Rails perspective, I look at that. I always look at that because that defines the interaction between participants, that defines the economic viability of the solution, that defines the trust mechanism, that also defines the flaws. Because if there is a way for me to collude, the industry or the network will collude and will try to cheat the system, because that's essentially the foundational and fundamental of game theory. People will game the system to their advantage, regardless of how you design it, right? And so that's important. But from a Rails perspective, imagine Rails is a vehicle for you to be able to move an asset in the network from point A to point B by ensuring that there are certain rules of governance, there are certain rules of exchanging of that asset that are adhered to. So I look for, of course, those foundational elements, but I also look for what is the digital asset? What are you trying to move on this? Because if you're trying to go in like retail payment space, then if you choose proof of work, which is a truly trustless system, and Bitcoin has proven that, then it's non-feasible because one, it's too expensive, or it will eventually get expensive, learning from the Bitcoin and Ethereum experience, but it's not scalable. If you're doing 12 transactions per second, you can't do business at the speed that we aspire to achieve with it, which means something's got to give, right? And so I look at economic viability, I look at speed, and that's why projects like EOS or Credits, Credit is a project coming out of Singapore, and the team is spread across the globe between London, Russia, and so is EOS again is a global project. These projects are aiming to solve some of the scale issue, which makes it ubiquitous. Now, until we reach ubiquity, it'll always be a romantic encounter with blockchain, I think.
Well, yeah, no, it makes sense. I know it was a loaded question, but that's you answered all my inquiries about that. Like I wanted to know what you thought about, because the cost factor is important. And once you start moving things and the size of scale worldwide, some of these chains, it just costs a fortune to validate these transactions.
True.
And so
No,
that's why I was asking, but yeah.
no, that's cool.
So one other thing I noticed is that so IBM is partnered with Columbia University now, and they're doing an online course for blockchain development. Have you been involved in that? Do you know anything about that?
Yeah, of course. We all involved. I think we're launching it next week sometime. So it's called an accelerator. It's not just a course. So the idea of blockchain is two things, right? It's hard for one company, just like in the past, you could adopt a technology like AI. You can adopt AI and apply different models, and a company can take advantage of it.
Mm-hmm.
With blockchain, it's a team sport. I mean, you can't, a company or a enterprise cannot simply consume blockchain and take advantage of it. It has to have a network effect, which means the problems that you're solving today, that you're solving for yourself, whether it's an intra-company interaction between participants, which eventually has impact of network, which means you're solving not only your problems, but solving the industry's problems, is some of the foundation look for it. This Columbia University Accelerator is aiming to just achieve just that, is be able to address industry-specific, consortium-specific problems to be able to, so it's not just about a course. Of course, it's housed in Columbia because of the brain trust and talent and some of the business acumen that they bring to this, and the academic and this healthy learning environment to question things and to be able to do things in a meaningful way. But I think it's more not about just having a course, because launching a course doesn't solve any problems. But this is actually working with academia, working with industries, working with technology companies, creating the right business models to launch technology meaningfully. That's the intent of the accelerator program with Columbia.
Well, great. I don't have any more questions for you, but I really do appreciate your time tonight.
Yeah, no worries. So hopefully this is worth the time. Hopefully you got what you were looking for.